Hello, and welcome to the How to Exit podcast, where we introduce you to a world of small to medium business acquisitions and mergers. We interview business owners, industry leaders, authors, mentors, and other influencers with the sole intent to share with you what it looks like to buy or sell a business. Let's get rolling. And now a moment for our sponsors. I want to highly recommend you get Acquisition Aficionado magazine. Every month, Acquisition Aficionado magazine brings you tactics for business buying and selling you won't find anywhere else. Learn firsthand from industry leaders who share their success stories, featuring in-depth interviews and stories from leading figures in the business acquisition industry. This multi-platform mobile magazine speaks to acquisition entrepreneurs wherever they are in the journey. And I want you to visit acquisitionaficionado.com today. Hello and welcome to the How to Exit podcast. Today I'm here with Ryan Hutchins, and we're going to talk everything about mergers and acquisition, buying businesses, valuation, and you're an active acquisition entrepreneur to top it off. So thank you for being here today, and looking forward to this conversation.
Oh, thanks for having me, Ron.
I always start with the origin story. You've got a varied experience for a young-looking guy, own multiple companies, own a valuation or a partner at a valuation company. I don't know if you own that or partnered at it, but tell us kind of who you are and why people should be listening to this episode so that we can dive into the good stuff.
Yeah, my background is really different. So I studied finance in college, graduated, had no desire to go into corporate finance, went into a 4-month, 33 semester credit accounting program. And once I completed that, started working at Deloitte as a tax accountant in San Francisco. And after receiving my CPA, I thought to myself, is this where I want to be, working 70 to 90 hours a week? And so I looked at different roles and stumbled upon a business valuation firm in Utah where my buddy was at, who said, "Hey, I enjoy working on Saturdays." And I thought to myself, no one enjoys working on Saturdays. So joined the firm. They only expected 40 hours of work a week. And so for the next 3 years, I essentially worked a 70-hour work week, taught myself sales, taught myself how to all the various theories and valuation approaches, and just started building my own like client portfolio. And I got to a point where it's like, okay, current company is not going to pay me commissions for my sales, so why not leave? So in August of 2018, my wife and I started Peak Business Valuation, solely focused on working with SBA lenders to provide independent third-party valuation reports. And from there, we kind of grew exponentially. So now we're a team of 14. This year will do north of 1,400 business valuations, and working with SBA lenders, individuals buying and selling businesses, divorce, litigation, gift and estate. So it's been a fun journey, and through that process, the like valuing a business is fascinating. It's almost like a game, and the more you see the same business model over and over and over again, you realize, okay, this is what works, this is what doesn't. Maybe I should buy this business.
As I say.
So yeah, so I had a buddy who was working at Deloitte when I was at Deloitte in Houston, and he moved to Virginia, started a franchise out there. He was a franchisee called Freedom Boat Clubs. He had 3 locations, ended up selling his business in 2021. And he and I, like, we were roommates in college. So we looked at each other and was like, hey, you have money. I have a business. We should buy it. So we bought our first company. It's a water softener and reverse osmosis installation and servicing business in Park City, Utah. We bought that business. And then since then, I've invested in a concrete contracting company. We worked with a searcher to buy a striping company. And so now we're minority shareholders in a striping company. We're currently under LOI to buy a plumbing company that will kind of mirror and benefit our other water softener company, because the plumbing company purely focuses on commercial. And so it kind of makes us better as an entire package at that point. And then I own a stake in a multi-location bakery and a multi-location pizza franchise.
So you're a busy guy. Awesome, awesome. And, I was telling I've interviewed a few people recently in the advisory space, and I said, like, I've asked at least the last 2, I was like, "I don't see how you do it." Like, what do you do? Like, if I evaluated businesses every day as an exit advisor or broker, I'd be occasionally you'd have to go, like, "I think I need to own this one." Right? Being an
Yep.
entrepreneur and, they both had reasons why they don't. One of them was a 65, 66, and the other one was, "Oh, I have strict rules against it." Right? And, or I stay in my lane, I think is pretty much what he said. I know what I do well, and valuations is what does well. He does valuations too. He makes a lot of his
Mhm.
money recurring revenue because he does ESOPs, and they have to be valued every year.
Yeah, ESOPs are a great business model. The hard thing about ESOPs is you have to be buddy buddies with the ESOP trustees. So it takes years to build that relationship.
Yeah.
So good for your buddy.
I'm sure you came from that space or something. So let's go, and I would be right where you're at. If I was evaluating 1,300 businesses a year, I'd be trying to raise money on the side too, because if it's really good, right? It's hard to let something that's like, man, this is really profitable. It's got a great profit margin. And you seen it, but especially a lot of times, like they say, only like 30 or so percent of these deals ever actually close. You do the
Mhm.
valuation, and you hear it doesn't close. You're like, why? Right? So,
Yep.
let's talk about valuation in general because that is such a open field. They're like if you look at the MBA programs across the United States, for instance, I read a couple of times where different like Ivies and different schools out there will teach over 100 to 140 different valuation models, right? And most of them, some of them are derivatives of others, right? But there's
Mhm.
just so many different ways it can be done. And then at the small to medium SBA lend was, what do you see as the most common, in your world?
Yeah, so with respect to business valuation, we're pretty much limited to 3 approaches, and within those 3 approaches, there's various methods.
Mhm.
And so for a privately held small business, really the 2 most common approaches observed are the market approach, and this is where you're diving into either publicly traded companies which are not representative for private company. So you look at various private transaction databases and you're looking at this information, assessing, okay, let's take a plumbing company for instance. Let's look for plumbing companies that have transacted that are commercial only, new installation, and this is their revenue and location. And so you can then look at kind of the compilation of those transactions and assess, okay, based on what I know about this company, this is how this company aligns with this percentile of multiples, whether revenue, EBITDA, or seller's discretionary earnings. Yeah, there's a lot that goes into the market approach, but ultimately that is the most common way to assess the value of a privately held company. And the one aspect that I wish was different but will never be the case is like real estate appraisers have the MLS and have this very robust database of actual transactions taking place every day in their city. And business valuation, like depending on the industry, you're basically digging through these different databases just trying to find 5 comparable transactions. It's challenging. So that's why we look at other approaches. So the second approach that's commonly used is called the income approach. And here you're just assessing the underlying cash flow relative to the perceived risk of that cash flow. And so you could either look at a method called the capitalization of earnings, where you're looking at historical cash flow. Primarily, these companies are very stable, either stagnant or kind of steady growth. And like it's essentially a more streamlined way to assess value for a privately held company. Whereas there's another approach called the discounted cash flow model,
Right.
where you're looking at projections, and ultimately these a discounted cash flow model should be applied to a company that has very erratic revenue and earnings, or they're just on a growth rampage where they're growing 30, 50% per year. And so it's like, hey, if we don't capture what's taking place and what the future could potentially hold based on its current trajectory, we would be disserving the company and undervaluing the business. So those are the primary ways, and there's a lot of ancillary ways, but ultimately we only look at those if it's an absolute necessity. So,
Do you have like three standard spreadsheets? You just plug the numbers in and that's the numbers, or is it really dynamic and it's like way more convoluted than that?
oh, great question. So our spreadsheet right now probably has over 60 tabs of different valuation approaches, different models, and essentially like the first area where we start is taking the financials and inputting them into our Excel model. And then from there, we have access to a sweet database called BizMiner, which has an API to the IRS's tax data and can pull an aggregate for, let's say, a plumbing company that's doing 1 million in revenue in the state of Texas. And it'll say there's 500 companies that fit that criteria. This is the average P&L and balance sheet for the last 5 years. So, and it's like, because ultimately the foundation of a business valuation is quantitative. And so if you don't have a good grasp and understanding of the financials, then the qualitative indicators don't really matter. And so BizMiner helps us with understanding, okay, how does this company stack up against this aggregate and what areas present concern? And what should we be digging into even further because they are either significantly underperforming the market or they're above market. And when you see a company that's operating at a 40% EBITDA margin, when the industry is 20%, you ask yourself, why? And like yeah, there's a lot of questions, but
You could either
yeah,
have
you
some
should.
really cool niche carved out in the market or some really creative CPAs or accounting going on.
Yep. Well, we worked with a fascinating company that they essentially had a monopoly on their town, and their town was adjacent to large oil and gas companies. And so they were the only ones that had the bodies and the people to service the oil and gas companies. And so their margins were just through the roof. And you look at that company and you're like, gosh, that would be fun. Like if I knew how to enter that market and go after those clients, like I wouldn't need to buy your company. But because there's other competitors in the market that haven't been able to get traction or a foothold, like you have to buy this company. There's no other way to get into those relationships.
And you gotta be careful those relationships are with one or more individuals at that company, and can you transfer that? Transferring a business is one thing, transferring a relationship is a skill set and art that not everybody's able to do, right? And
Mhm.
in the United States and in some of the other people listening around the world, in their small communities, these towns, there's still the good old boy network in some of these businesses. You own a
Mhm.
brokerage, a business or a real estate brokerage in some of these small towns, and you try to open a new one, and you start kicking butt there, they'll turn against you. I know our real estate firm, we did I had a real estate firm that I owned for a long time, and we did so many transactions that our brokers when we gave them when we brought on a broker, uh, overnight, they would get 30, 40, 50 listings sometimes because 'cause we'd move our brokerage over there, and the big boys, we got all kinds of I get calls because friends of mine I'm friends with people in the industry. When you see these businesses come through, I see that you own quite a few right now. How do you refrain from like, "Okay, can we take on another one? Because this is really good." And I got 2 questions in that. The one I wanna say is if you're doing 1,300 valuations a year, do you know whether or not they succeed in the transaction? Do you get any update later saying, "Yeah, it was closed?"
Ooh, good question. I'll answer that one first.
Okay.
So, when we are working with a seller or a buyer directly, we always know whether or not it closes,
Mhm.
only because the individual that we worked with will consistently email us or call us or text with like really like 10-second, 15-second questions. So whereas when we work with banks, a majority of the banks that we work with, those deals do close,
Mhm.
and we will follow up occasionally following that deal to see if it actually did close because we have our own internal
That's
database of transactions.
that's why I was asking. Right?
Yeah, so we don't use that database for business valuation purposes. We primarily use it for kind of sanity checks
Mhm.
just because it's not a published database so that if it went like we always prepare evaluations in such a way that if it ends up in front of a judge, the judge and whoever's looking at it essentially could figure out how to recreate it. And when you're using a database that's not publicly available or published, it's hard. And we don't want to spend the money to get it published. So we like having, I think now we have around 4,100 companies listed in that. And of those, like when we're looking at a deal, how we refrain ourselves from saying, oh, like, put me in, coach, like, I'll be in line if this doesn't go through, is I put in place a essentially a barrier because ultimately our business valuations have to be quote unquote unbiased,
Right.
independent. And so therefore, like if anyone on our team is looking at one of the potential valuations we're working on, they can't touch it for another 6 to 12 months.
Oh, wow. That makes sense, though. You gotta
Um,
be unbiased. You gotta be and some biases
yeah.
aren't I mean, they're not apparent, right? You can have a bias towards something and not even realize you do, right? There's
Mhm.
if you get into the science of biases, there's a dozen or 2 of them, right? There's cognitive bias, there's all these different things, and many of them you're just not aware they exist until somebody else points it out. So, I like that you have something in place that says, "If we're doing the valuation, we can't touch it."
Yeah, and like one of the and when we're working with a bank, like ultimately they will provide the borrower contact info.
Mhm,
And at that point the borrower, the buyer has already secured the business and it's just finalizing the financing. And so the only way we would be able to get involved is through investing. And so we've looked at potentially investing in those companies
mhm.
a year after the fact. Again, we're too busy,
Right.
and that's a separate business line and another when you're an investor in a company, you have more to be aware of because when you're blindly investing in companies, thinking, "Oh, they'll be successful." It's like, not really. Like,
What's
yeah, we Oh, you go, Ron.
I was gonna say, what's the price point for a valuation? And, if I come to you and say, "Hey, this one's a tricky one. I don't know how to value it. Could you take a look at this company for me as the buyer?" It might be something I'd be interested in. What does it cost to do such a thing?
Yeah, so for business valuation purposes, like what's nice about working with so many companies is we've created a Google sheet that acts as a matrix
Mhm,
that you could filter by industry, revenue, EBITDA, and the purpose behind the business valuation. And we can see an aggregate of this is what the average hours are,
mhm,
and here's the range in terms of pricing. So most business valuations for us are anywhere between 2,600 and 5 grand. We have exceptions with like as the larger a company gets, and depending on the industry and the various different business models within that business, the more kind of complex and time consuming it becomes. And so we right now we have a couple projects that are around 10 to 12,000. So but for most people buying small businesses, they're typically looking at a company with revenue between 1 and 4 million.
What's the most complex business to evaluate?
Oh, there is not an industry that is purely applicable to. It more so has to come down to the cleanliness of the financials.
There you go.
So we're looking at a company as of today that did 30 million, 68 million, 22 million, and now they're back at 59 million. and their financials, you would think at that size, your financials would be audited or had a compilation report, and they do not. And they provided cash and accrual financials that aren't like cash for 1 year, accrual for another, and it's like we need consistency. So really, the complex companies typically come down to how readable and how knowledgeable is the person that provided the financials. Because if we ask questions and the individual that we're working with doesn't have a way to answer without going back to their accountant, like that already heightens our perceived risk of the business. Because if you're buying a business, you should know. Like if you're selling a business, you really should know your financials. So yeah, financials is what makes a business more complicated.
What's the so I walked into a business. I was at the point we've had a couple phone calls at this stage. They did let me tour the manufacturing facility, and I didn't even phase me. I've told this story a couple times on the podcast already. It didn't even phase me that I didn't see any computers around until I said, "Well, our next step is start to look at the financials." He's like, "Okay." He walks me into this room, opens the door, and there's file cabinet after the entire room. Probably about a 20-foot by 15-foot room was nothing but file cabinets, like the big vertical kind. He opens the door, pulls
Mhm.
out these green folders, and it's the old 1930s, 1940s. I don't know when they used to use these damn things, but the green notebooks. And
Yep.
I panicked. I was like, All your accounting's in here? You don't have a single computer?" He's like, "No, we haven't used computers yet. We're a manufacturing company." I was like, "This is going to be horrible." And then he handed me a couple, and he said, "Well, this will take me a minute. Can I look at some of them?" And he goes, "Yeah, here's the last quarter, and here's the quarter before that." I started digging into it. It was the cleanest books I've ever seen in my freaking life. Balance statements, I understood. Income statements, I understood. Accounts receivable, readable. It is. I started asking, "Who in the heck does this for you?" His wife's a CPA. Right? She's been like they're both retirement age, and it was just the cleanest thing. No, I had to call around and go, "What would it take to put all this into a computer for me?" I was trying to get quotes to like, you know, at least the last 3 years. If I bring you the last 3 years stacked in green books, I want them data entered, and then I want somebody else to validate it that, that it's right, that you didn't enter typos, right? But we didn't do it for other reasons. We didn't do the deal for other reasons. But, yeah,
Yeah.
that was the most interesting one I've seen, and, there's still companies out there, they just done what they've done for so long, and it's working. They don't think anything else of it until they come to sell it, and a guy like you and me needs or somebody else needs to see that stuff.
Oh yeah. Like we haven't dealt with that scenario in a couple years,
Mhm.
but just this week we've had two companies that we've been engaged on that their tax returns are handwritten. And it's like I understand the strategy behind it
Mm.
because ultimately they will do the work in the computer and create the tax returns in the tax software, but the accountant will go in and handwrite it because the IRS's scanners and machines can't read written handwriting.
Oh,
And so the likelihood of being audited drops significantly.
is that a red flag? Because it could be.
It's not a red flag. It really comes down to the age of the owner.
Mhm.
So like my father built a 750 person accounting firm, and up until 2002 he preferred handwritten tax returns. So it really comes down to age
Okay.
of the individual and what their accountant suggested to them.
It's good to know because if I seen some it's like if I was doing my due diligence and they sent me all their stuff, right? And, I've gotten as far where like, I take all their accounting and all their stuff, and I get access to their bank statements, and I try to, reconcile it, make sure it looks right. Like, is what you're putting in your bank, what you're telling the IRS is what you're telling
Yeah.
your tax software or whatever, or
Yeah.
your accounting software. And, that's more difficult than I wanna do as a normal guy. I bring CPAs and stuff in for that. That's a difficult play to play.
Yeah, well, and that's there is a service that you can like if someone has handwritten their tax return,
Mhm.
you could the IRS allows you to pay for IRS transcripts that basically provides you like a 4-page printout of what was reported to the IRS so you could just do compare and contrast.
Mhm.
So, but yeah, when it comes to really complex financials, like a quality of earnings and proof of cash, are very fun exercises to do as part of your due diligence.
Do you guys do QS reports?
We do.
Yeah.
We got into it last year. We had too many people asking, and it's like I see the benefit of a quality of earnings or a proof of cash, but at the same time, my favorite thing to do is have our Q of E team working on the Q of E. Average Q of E for us takes anywhere between 80 and 100 hours, and then having the business valuation team working on their financial analysis. And we did one back in May where we're doing the valuation and the Q of E. By the time the Q of E was done, we compared it to the business valuation financial analysis, and adjusted EBITDA and seller's discretionary earnings were the same in every historical period. And it's like, okay, what's like a Q of E is great because it does a pure deep dive beyond kind of what you read in a P&L or a tax return. You're looking at general ledger, trial balances, and it's a great exercise for those who are not as informed with respect to financials.
Now, is that normally a lower middle market thing where like companies above it? It's not a normal thing you have to do for an SBA loan, right?
It's not. So normally we work with companies that are doing north of about 4 million in a transaction price.
Hmm.
So whenever we have individuals calling and they're like, "Oh, I'm buying the business for 1 million," it's like, okay, QV is going to be overkill. And who are you listening to from a podcast perspective? Because those are the people that are usually saying you need a QOV to buy the business.
We've had a couple guys on here that do them, but usually it's that lower middle market that, you know, when you need the what do they call that pari passu? I always butcher the name, the extra loan on top of the SBA loan, right? To hit that 7 to 9 million range, or you need to go to private banking and raise capital to
Yeah.
raise a fund because you're, acquiring things in the $10 to $20 million range. That's when, making quality of earnings. In my mind, it
Oh,
makes a lot
it
more sense because then you've got investors to answer to and everything else.
yeah, and the more financial due diligence you do, the more comfort you bring to others.
Hmm.
And ultimately, like from a buyer's perspective, like a buyer or a buy side agent is always going to do a quality of earnings the larger the transaction gets. And on the opposite side, if you, the seller, know a buyer's getting a quality of earnings, you yourself should also get a quality of earnings so that when you come to the negotiation table,
Hmm.
you have numbers to go off of that are not just based off simplified documents that you have already as a seller. So
You're
we've seen some sellers just get handed and just negotiated down because the buyer knew the numbers better than the seller's team did.
What have you learned from acquiring businesses now that you've done so much effort on the quality of earnings and you're a CPA, probably to the equivalent, in the world of CPAs, you're probably to the equivalent of forensic accountant, right? They probably don't have much on you.
Yeah, I let my CPA license expire in March of this year because when you're not practicing for
Mhm,
9 years, why keep it?
mhm,
So save yourself 80 hours of CPE credit a year. But the largest lesson that I've learned, and the reason why we have that 6 to 12 month like refraining, like I don't even know what the proper term is, but kind of it constricts our team from doing any deal, etc., is all because of me. So the concrete contracting company
mhm,
that I invested in, I essentially took the distributions and the profit from Peak Business Valuation for the first 2 years of business
mhm.
and rolled it into that concrete company, and I owned a very small minority stake in the company, and the company was on trajectory to do about 20 million in revenue. And so you're like, "Oh, this is a pretty safe investment." And we did the valuation a month later. I'm like, "Hey, I want to invest." And so invested, and the guy gave me a 30% discount for my minority stake purchase, and I'm like, "Oh, this is a good deal. Come to find out, a year later, after some medical diagnosis, a divorce, him not wanting to work in the business, hiring two individuals that never collected on AR.
Hmm.
So AR ballooned to about 6 million. And then they fired those people. Then they hired another individual to run the company, and he used the concrete company as a front for fraud. And so just last month, the company officially is no longer. So it files for Chapter 7.
Is there a way to recover from that where you can, like, fire up a different company? You have the, demand you're gonna sue 'em if you don't get the customer list or anything?
Nope. And I gave up.
Okay.
So when everything came to fruition about a year and a half ago, looked at my wife, and my wife is like, every check you write to someone to buy into their business, I essentially consider it lost. And I'm like, oh, that's good to know. Like, if you don't care about the money, then why would I care about pursuing it? Because suing someone just doesn't sound fun,
It
and
rarely
it
works
puts
out, dude.
bad blood out there.
Yeah, it
Yeah.
rarely works out, and the lawyers are the only ones that make money, right? I ended up in one, I left a real estate investment firm. I had a marketing firm, a real estate investment firm bought me, right?
Uh-huh.
And then, I worked for the guy for a while, and he decided to quit paying me as a partner. I owned a piece of his company. I was bought and it had equity, and he wanted to make me an aligned employee, like an employee instead of a thing. So he started trying to pay me as an employee. Got to the point where he owed me about 60 something thousand bucks in back pay. So we bumped heads. I left and created a competing business because there was not really any non competes or anything, or not anything enforceable. And he tried to come after me, tried to sue me. I countersued because all the money he owed me. The business I took one of his business partners too with me, and he owed him
Uh-huh.
80 or 90 grand. So we countersued together. And basically, at some point, when he realized we were hiring forensic CPAs to audit his books, and actually reached out to all his investors and just to ask if we could audit their books too, because we knew he wasn't paying his investors the full amount. He was telling them at different numbers. He knew he
Mhm.
was in trouble. He begged for mutual dismissal, right? And at this stage, you know you're never going to collect money from this guy, right? Just not. If you
Yeah.
win the lawsuit, he's gonna dodge you for years and years. So we just when he had begged for mutual dismissal, we just like, fine, you know. So, but yeah, nobody wins. The lawyers all both sides. He had to pay his attorneys, which I seen later they were suing him because he didn't pay his law bills, and we had already paid ours. So, you know, yeah, the only person that wins in that scenario is the lawyers. But there's
Yep.
something to be said of like the customer list and you know I I don't know if you've had any play with those people at all though, right? If you
Yeah, I didn't have a shot with the customer list
yeah.
because ultimately there was so much bad blood drawn up in the last like 4 months, especially with the fraud,
Mhm,
that it's like, I don't want to say, hey, like you used to be a customer of XYZ company,
mhm.
you should work with me now.
You don't want
And
the
they're like,
association.
weren't you just a part of that company?
Mhm,
And so it's a space I got out of because it like concrete is a very fascinating space because your crews will leave you if a competitor is willing to pay everyone a dollar or $2 more an hour.
yeah, I
And
get it.
so like the rotation of crews is just baffling. Whereas in plumbing, it's more so 1 to 2 person jobs, and you could compensate your team well enough that they don't even consider the hourly rate because they know that there's benefits above and beyond based on performance metrics
Right.
and doing more merit-based pay versus fixed pay.
So, I've interviewed your old business partner, and we've been in the same town even though we both live on the other side of the planet, so it's a small this community is a lot smaller than people think it is. This buying and selling and merging or acquisition of small businesses it's a lot smaller of a community than most people would imagine.
Yeah, well, I think it just comes down to risk appetite.
Yeah.
So like what I do valuing companies, I know dozens of individuals who would be phenomenal operators but it's really the risk of finding client work, the risk of being able to fulfill that client work. And so a lot of individuals that I've known that have been doing business valuation for the last 20 years that are still working at a company, they're like, I'm just comfortable where I'm at. Like, I don't want to take the risk at this point. So, but yeah, my whole goal with my current team at Peak is anyone that joins the team, if they were to leave, that they're leaving to not join another company, but to buy a company, because they now have the knowledge that the average business owner is not smarter than you and me.
Right.
Like, they just found a great business because they either were a technician
Mhm.
and started building a business, or it was a hobby and they just started.
I call them
So it's
I was gonna say I call
oh,
them
you
accidental
go.
business owners, right? There's, like my dad. Dad worked at a paint manufacturing company where they made paint, and he ended up at the register where he would mix the colors for him. And if you give you kind of, my dad was a rough character, but he was blind in one eye. He got shot in the eye. You ever hear like, "Don't shoot the BB gun, or you're gonna ricochet and take somebody's eye out"? That's exactly what happened to my father. His brother was shooting jars that ricocheted, hit him directly in the pupil. So one eye was brown and the other eye was green, and he could only see silhouettes in the green eye. And which is, a very unique kind of look. And he used to get so mad at my friends because he worked in that paint factory for so many years. His forearms were huge from stacking paint, and he was blind in one eye. So he
Mhm.
squinted all the time because all he could do is see silhouettes. So my friends would go, "Your dad looks like Popeye." Boy, that would tick him off. He's like, "What did he call me?" But and he was a rough character. But people come in all the time at the paint factory and say, "Hey, that color matches that great. Do you know anybody who can put it on for me?" And being the entrepreneur, he's like, "I'll do it." Right. So he ended up, painting this
Mhm.
house and that house, and next thing you know, we're painting all kinds of. One summer, I think our peak summer, we painted 187 homes. Right. So when I say summer, and I'm very liberal with the phrase. In Oklahoma, the time for between it's too hot to paint and the time it's too too cold to paint. So you're talking early spring to late fall, right? But you know, these accidental business owners, he would have never, if he hadn't been mixing paint and he worked for that company for 44 years. All the other stuff I told you he did, was side gigs. He always had something on the side going.
Mhm.
But a lot of these business owners, that's how they came about owning their business. When you really get into the story, and that's the part I love about talking about off market deals, is why did you build this? How did you build this? Getting to hear the story, and most of the time it's,
Yep.
well, I was. Like I was an accountant. I was doing these deals, and all of a sudden somebody asked me to do it on the side. I did it on the side. Then I had three on the side. And next thing I know, it didn't make sense to be there. The same way your story, right? You accidentally created this, not accidentally necessarily, but it wasn't like you didn't set out and go, I'm going to quit on the third year into this, and I'm going to have enough clients. It wasn't one of those things that was foreseen that long term planned. It was just something that kind of occurred because it was more logical to do. Many of these business owners are the same thing, right? My dad used to make custom woodwork, in
Mhm.
this wood shop. He was really good at it, and he made one for one guy. The next thing you know, he's churning out the little. I think he made 200 of these little cabinets that go over your toilet that has the towels, right? But beautiful stained wood. It was right, but he made one or two of them, and then people started like showing other people, and they wanted one, and then basically he made everybody in town one. He had a little assembly line in the office. I remember being out there helping him sand as a little kid. Like, this is young, right? This is like third, fourth grade, sand and stuff, like helping him get ready. Uh, you know,
Yeah.
and then not
Oh,
being allowed to
awesome.
go in the garage when he was either staining, because some of them were staining and some were painting, and he didn't want me breathing that stuff. So, oh no, you can't come out and hang this. But when it was done, it was cool because he hung all the boards from the ceiling from fishing string, and it would spray them,
Uh-huh.
right? So you'd go out there and there's all these hanging pieces of cabinets that he's going to bolt together. And he was a perfectionist, so there wasn't a single run, a single drop. Everything was perfect on all of them. But yeah, the he accidentally stumbled on that because he did something for somebody, they liked it, and they shared it with somebody else, and next thing you know, other people are asking, and he's in the business of making vanities, or what you want to call them. But that happens a lot. I mean, you talk to people all the time that's they just did something they enjoyed and got good at it, and next thing you know, they got a customer and two customers and five customers, and now they're selling it to you. But Unfortunately, in that story is nowhere along the lines does somebody go, "Hey, you gotta learn accounting and get your books right."
That's typically an ancillary skill that people learn later on in business.
Yeah.
Like, we you could tell how financially savvy a business owner is if you can ask them, "Do you do monthly bookkeeping or annual bookkeeping?" And if they say annual, you're like, "That means you only know for sure the numbers for tax time."
Yep.
Which means you live or die by the cash in your bank account, which is not a great way to run a business because it's very difficult to make informed decisions without understanding how each of the revenue and expenses kind of play with each other. Whereas like monthly financials, and there's great resources, like a lot of individuals just starting out. I'm like, if you're already using QuickBooks, just use QuickBooks bookkeeping because then they already know QuickBooks, they already know what to do, and it's a reasonable price.
Right.
And they'll get everything prepared for you. They'll reconcile and really like knowing that you shouldn't be touching your books and that you should be hiring someone to do those to help you understand your financials. It takes a lot of humility because when I started my business, I'm like, oh, I can do my own bookkeeping and tax accounting. I was a tax accountant. And then after my first year, I'm like, this is the worst thing ever. And so I hired a bookkeeper, hired a new tax accountant, and I'm like, oh, my life is easier. I can actually focus on what I'm good at and not
Right.
the kind of back office support work.
I'll tell you, I can count I'm almost run out of fingers on one hand, I'm gonna have to use the other hand, the number of times I've been talking to off-market deals, and it comes down to, "Okay,
Uh-huh.
we're gonna need to see your financials," and some version of this phrase comes out, "Do you want the Excel spreadsheet my CPA or my, tax person created, or do you want me to send the bag of receipts that I gave them?" I was like, "You did do what?" Their accounting is at the end of every, like, quarter or once a year or whatever, they take this brown
Yeah.
paper bag my dad did this, this is my dad's accounting method. All the invoices went into one brown paper bag, like a kitchen like a trash bag you get at the grocery store. He'd put all the invoices, like, all the payments, the ones that are paid were in one. He had a stack of people who still owed him money, right? But those never went into a bag yet, and then he had all of his receipts for all the materials he bought and everything else in a bag. And, once a year, our tax person, I'd go with him when we dropped this stuff off. When I graduated, when I took over the business, I thought that's what we did at the end of the year. When I took it over and I stopped by, I seen that guy one at the end of the year because I took it over towards the end of the year. He goes, "Could you please at least bring this to me quarterly?" I was like, "Yeah," he goes, "I've been asking your dad for years to do that." I'm like, "Sure." So I started taking it to him at the end of every quarter. I was like, just call me and remind me." He called me and go, "Hey, it's time to drop off that stuff again," right? You know, but that was what we did. There was no spreadsheets. There was no nothing. I was,
Yeah.
really computer literate. I had a TRS-80 at the house, right? I knew writing code. I was still learning, I was a little bit of a nerd. And, but I didn't, you know, didn't know any better to know any better because that's what I was taught to do. And,
Mhm.
tell you, probably 4, maybe 5 times I'm gonna need my other hand after talking to a few hundred, off-market deals, where then when you get down to the brass tacks of it, it goes, "Okay, we're gonna need to see the financials now." And they do some "Well, it's in Excel. Where do you want me to send the spreadsheets?" Or it's in, "I've got all the paper. You want the paperwork, or you want let me see if my CPA lady or my tax lady can send you something she put in the computer."
Besides that scenario, I always enjoy talking to individuals who are like, so I have what I report to the IRS, and then I have my other books that show kind of what true revenue is in profit. And I'm like, you do realize that you evaded taxes by doing that. And two, no bank's ever going to lend on it.
Mhm.
Three, we are just taking you for your word because there's no really good tracking because most cash receipts are never reported really anywhere. And it's like if you've already eaten your cake once by evading taxes, let's say you save 30% in taxes on that profit, really it just comes to bite you in the butt because if you could have shown 100,000 more in profit at a 3x multiple, that's 300,000. And instead you decided to save on $30,000 a year
Yeah, you save
in
$30,000 a year
taxes.
in taxes, not reporting $100,000 in revenue, which would have given you $300,000 in, exit valuation. It's like it's
Yeah.
when you know the math, it's horrible math, but it happens all the time. I've actually had many of people go, "Well, like, you got well, that's not all my income." And like, they do it just like I mimicked them for a reason. I'm like, "What do you mean it's all your income?"
Mhm.
"We get a lot of cash business." And I was like, I always just repeat people. I'm an NLP guy, so I get deeper answers when I just repeat the last 3 or 4 words of what you said to me and get really silent on
Mhm.
you. So "Well, that's not all my income." I'm like, "Not all your income." And that awkward silence kinda builds up, and they go, "Yeah, yeah, well, we do a lot of cash transactions," and I'm like, "Cash transactions, how do I see those?" "Well, I'm telling you right now
Mhm.
they're there." I was like, "No, no, no, I understand you told me they're there. Where do I see them?" "Well, they don't
Yep.
exist anywhere other than my head." I said, "Exactly. Nothing I can do with that, right? And as a buyer, I'm not gonna give you any." Like, as a matter of fact, I have to go talk to my attorney and see if how we purchase this is now only limited to an asset purchase because I take if I take your stock or I take your name and I do all the other stuff, I take the tax liability of all the tax fraud you've done.
Yep.
Right? So now you've just shoehorned us into one strategy, which was normally what we'd go with anyway for other liability reasons, but you shoehorned us into a strategy that may have not been to either one of our favor. So out of these businesses you've acquired, you've had the concrete company go sour. The other one's doing pretty good. You're pretty happy with your acquisitions and your investments?
Oh, yeah. So the water softener company is doing great. The striping company is doing great. The bakeries they're opening up new locations. They just broke ground on 2 new sites, and the pizza franchise is just chugging along.
Bakeries are tough
So it's
work, man. Those boys get up early. I had a friend who, a good friend of mine, Travis. Travis had one for years, and he got divorced, and his wife got it, and then he started to try to create another one. But he'd tell me, "Oh yeah, we get up at 2 in the morning to start proofing bread and making dough," and I'm like, "You do what?" Like,
Yep.
because you want that bread ready when everybody's going to work and they're stopping by to get the sweets and the other products you make, or they're getting stuff for their day at work or whatever. So by 7
Mhm.
AM,
Oh,
you have the
yeah.
product on shelf. So,
Yep.
yeah.
Oh, it's a hard business, but this guy figured how it works
Mhm.
and how to make it repeatable, and it's like, "Okay, if you figured out the game, just play it out. I'll help with funding from the standpoint of you need this to continue growth."
There's some
So, it's Oh, you go.
I was say there's some pretty cool ones in Tulsa there. There was one that we really like to go to. I can't remember the name off the top of my head, but they had one central bakery and then had a bunch of little outlets, and you go in there, it looks like the bakery, and they made a couple products there.
Mhm.
They had ovens in the back, but it wasn't that, you've seen the trucks going around early in the morning. They had a central big, factory-like bakery where they baked a bunch of stuff and then
Mhm.
delivered to all kinds of places. Not even just their own, they actually delivered to a lot of other people's, little stores and convenience stores and gas stations and other stuff. So, I like the business model though, because 'cause you're really just taking flour, yeast, and water, which are very low cost items, and, putting some heat to it and making it, something that's condensed to, a few cups to something that expands to, a beautiful product on yourself, and then you get to charge a premium for it. Uh, I have to
Mhm.
imagine other than labor costs of the and equipment costs, the bakeries tend to be pretty profitable.
Yeah, they are. It really like, it helps when you own the real estate. It's typically after, uh, kind of inventory purchases and labor.
Mhm.
That's the next big expense. But, yeah, it's once you have the equipment, like, the original location of this bakery has equipment from 60 years ago
Right.
that they're still utilizing because
They don't break.
it
Big giant
never breaks.
industrial mixers don't necessarily break. They were made better back then, right?
Yep. Or molds.
Yep.
Like, you have a metal stamp out mold,
Mhm.
and really that never changes.
A buddy of mine used to own that. Actually, a good friend of mine also owns a donut shop. He sold it many years ago, but I made the mistake of when I first moved back to Tulsa. I moved into one of his houses that was right beside it, and I got to see up close and personal how donuts work, because anytime his driver wouldn't show up to deliver them all, he'd knock at my door because it was next door and say, "Hey, buddy, we've been friends forever. Could you go deliver donuts? I'll give you $50." And I was like, "I don't need $50." And, and you're like, but, I'm not going to tell you no because you're in a hard spot, right? So I remember, like,
Mhm.
sometimes I would be so tired I'd have to nudge the wife. We didn't have any kids yet. Like, "Would you please ride with me? I don't want to fall asleep at the wheel." And we would go around, and we had all the alarm codes to all the convenience stores around town. So we go in and deliver their
Mhm.
donuts and baked goods to everything, and take about an hour or two of doing it. But, it's probably the cheapest per hour work I've ever done in my life, because it was a friend, asking for a favor. And I would be begging him,
Mhm.
and sometimes those people quit, and I'd be begging him within a week or so, "Would you please hire somebody else? I do not want to do this." "Oh, you're done by 7 a.m. Don't worry about it." I was like, "Yeah, but I just don't want to."
Yeah.
Right. But, yeah, I got to see how that stuff was made too, and, those boys show up early, proofing and making dough and frying donuts and putting toppings on them, and,
Mhm.
he did 6 figures out of his little shop out of Sapulpa, Oklahoma, and, unfortunately,
Mhm.
it was a story that ended bad. I won't go into it because people know me, know him, and, but he ended up having to sell it for some tax reasons. So how do people reach out to you if they want to chat with you, if they want evaluations done, or, if they want to work with you in some way or shape?
Yeah, the easiest way to get a hold of me is just through our website,
Mhm,
so peakbusinessvaluation.com, and we're a very unique valuation firm from the perspective of we focus on education. So we write articles on any industry, how to value, uh, applicable multiples from a range perspective for that particular business model,
mhm,
and what value drivers either increase or decrease value. So we spent a lot of time on content. And so you could fill out a web form on our website or simply call 435-359-2684,
okay.
and or just hit me up on LinkedIn. I'm very, very active on LinkedIn.
Well, tell your business partner buddy I said hi. So,
Oh, I will. Yeah.
like,
It's a small world.
yeah, I was like, that story sounds familiar. Surely there's not more than one guy who went out and created, boat rental and party rental type of, business in multiple locations, and, like, it's gotta be the same guy. Well, thank you for being on here today, and, we'll just call that a show. How about that?
Okay, that works. Thanks, Ron, for having me. It was great.
Awesome. Hang out for just a minute. I want to announce our new channel partners, the ITX Marketplace. Since 1998, ITX has created $5 billion in value by selling more than 225 IT businesses in 20 countries. ITX works exclusively with IT-enabled businesses generating between 5 million and 30 million who are ready to be sold, and M&A decision makers who are ready to buy. For over 25 years, ITX has developed industry knowledge that helps determine whether a seller is a good fit for their buyers before making the match. ITX Mergers and Acquisition Marketplace we have partnered with has a proprietary database of 50,000 plus global buyers seeking IT service firms, managed service providers, Microsoft service providers, software as a service platforms, and channel partners with Microsoft, Oracle, ServiceNow, and the Salesforce space. If you have an IT enabled business you're ready to sell, I want you to visit the itexchangenet.com/marketplace. How to exit. That link will be in the show notes. Visit them now.